Welcome. I'm Debbie Schwartz, founder of Road to College. I'm here today with Luann Lee, of your college planning coach, and we are just wanted to. This isn't actually very structured. Sorry, I'm going to have to mute everybody one more time. Okay, Luann, you're back.
Yep.
Great. If you come in unmuted, if you could do me a favor and please just mute yourself. And that's our fault. There's something wrong with our settings that you didn't come in muted. But today is a little bit structured. I'd say a lot unstructured. So we have a list of topics that we want to go through to just help answer a lot of questions. And then I know that there are a lot of questions that people are having about the FAFSA. Love to hear if you put it in chat. Tell us what year your student is in high school or college, and if you've been able to get through on FAFSA. We'd love to hear it. I mean, I will be perfectly honest that I have not had the chance to sit and wait and try and get through. I don't know. I think Luann was trying, but we didn't get through. But there have been people who've gotten through. So would love to hear anybody's experience. And but we're here to just answer questions about the new FAFSA, the new calculations, how to handle the FSAs, all that stuff as best we can. So let me put in the chat. I see.
Hey, Debbie.
Yes.
Also, if people have a question after we've, talked about something, have them put a Q in front of it because it'll be easier for you to find the questions.
Great. Okay, and I am also putting this on Facebook for if people want to watch it there as well, they can. Great. Okay, so here's our list of topics I'm going to put in the chat. And Luann, we're going to go through them kind of section by section, share a little summary of what we think you guys need to know, and then add your questions for that topic as we're talking about it. So thank you all for being here. I see there's a lot of seniors in high school, parents of seniors in high school. It makes sense. This is not just a new FAFSA for you. It's just a whole new process. And for the parents who have college students, even though maybe you feel like you thought you had this under your belt, it's going to be new this year. So always creates anxieties. We will be sharing the recording. So if you can't stay the whole time, the fact that you're here, you'll get a link tomorrow. Okay, Luann, you want to start? Let's go topic by topic, and then I'll be monitoring the questions, and I'll ask you the question if you didn't cover it in your quick summary of the topic.
And I'm going to completely disregard watching the chat because I can't talk and chew gum at the same time. All right. The number one topic that, is this whole year has been, what about divorced and separated parents? How are we supposed to determine or how are they, as far as, Big Brother, Department of Ed, FAFSA, whoever, how are they going to determine which of you provides the most financial support? And they are not. It's you and your ex. Or soon to be ex if you're separated. So you guys are going to have to decide, and I know it gets kind of tricky, especially when there are step parents that are now involved if you've remarried. So ideally, if you are divorced or separated and have not remarried, you kind of know what each other earnings were. And if you are absolutely splitting everything 50-50, there is no question that it's not 50-50, then it's going to be the parent that earns the most. That is going to be the custodial parent or contributor. You're no longer parents anymore, you're contributors. That is going to file the FAFSA, regardless if the student lives with the other contributing or contributor parent.
So when there's a question And it's actually, I'm guessing it's not from somebody who's divorced, but I think it's a little confusion with some of the divorce new regulations. They're asking if the parent of a married couple, the parent who earns more needs to be the parent who fills out the FAFSA. So they are not divorced, but they're kind of questioning the who.
Oh, no.
No, right. I just want to clarify.
Yeah.
Everything Luann's talking about is just for divorced families. If you're married, it doesn't matter who fills it out.
That might start a divorce. You know? So, but let's just say that you're married or I'm sorry, divorced and or separated, and some of the terminology is now saying legally separated. So like in the state of California, you have to be legally separated to be determined separated on FAFSA, which is in each state. Some states, it doesn't have to be a legal separation. So there's a wrinkle there. Know what your state laws are. Or maybe you can show that, hey, we have been legally separated in different households for the last 6 months to a year. So, you know, there's going to be verification forms in many instances, and it's going to depend on each school and the questions that they're going to ask. So if you are separated or divorced, and maybe it's not completely 50-50, and so you know, you're trying to figure out, well, my ex provides child support, so that must mean that they provide more financial support. No, it doesn't have to mean that unless they're providing all support for your household. So let's just say that they provide child support, but your student still lives with you 75% of the year. You're providing more financial support in the roof over their heads and food on the table and all the things that, kids cost a lot of money. So just look at that from a common sense, realistic look on which of us are providing the most support. And then just be prepared if there's a verification request with, some sort of documentation or such. Now, there's been questions, well, this is only the biological parent. It doesn't include the step parents, which is incorrect. So if you have remarried, and you're 50-50, and now it's wondering, well, which of us should file, it's going to be that household income of the parent and the step parent. So they will both be contributors, which lends us to the FSA ID, who should file and who needs one. So technically, when you first log into any of the tutorials, they say that every contributor that's on the tax return needs to have an FSA ID and will receive an invite. But then they go on to say, well, if you are filing your taxes, married, filing jointly, you live in the same household, everything's, wonderful, then only one parent needs to have the FSA ID to transfer that tax information from the IRS to FAFSA and, electronically sign when they go to submit. So we just wait to see, is that going to work? All of this, everything is new. And those of you that have logged in and tried to log in, how glitchy this is. So there's all kinds of errors that are coming up. What I've been advising my private clients is, let's just have both mom and dad have an FSA ID if we need it as a backup. And if it comes up that, say, your student logs in and they're inputting and they put, both of you as contributors, they don't they don't understand, what married filing jointly is. Half the parents that I talk to don't even understand how they file their taxes. So how is your student going to know? And my concern is, with as glitchy as this is, if both parents have received that invitation to log in as a contributor, and so if one parent doesn't, because, they say, oh, we only need one of us to do this, is the system going to accept that or not? Because there's this invitation out there. Because the way that it's supposed to work is everybody needs to do their submission before the FAFSA ends up getting submitted. So hopefully that's as clear as mud in
There's
that.
a few questions about divorce and assets. One person's asking if they're divorced, but the father is the main earner, but the mother owns the 529s. So what gets reported?
So whoever is the parent that is filing the FAFSA, who is the, chief contributor, custodial parent, if they do not own the 529, it's not reported. So the 529 is in the name of, whichever parent.
So that could be a little strategic thinking that those
it's always
parents
been
want.
that way.
Yeah,
It has always been that way.
And another question, if child support is now an asset, which did you actually say that? I can't remember if you said that yet.
We haven't gotten to that yet. So
okay.
you're going out of order, Debbie. But go ahead. What was it?
Well, why don't you explain about the divorce and child support, and then I'll ask this question.
Right. So child support, is the good thing about it, is it's no longer considered income to the parent that's receiving it. So it is going to be considered an asset. So whatever child support that you received in the past year for 2023, this past year, is what you're going to report as an asset, not as income. And that's a big thing, because income is always assessed much higher than assets.
So this question is, I assume the parent has two children that are receiving child support. She's getting one lump sum. Does she split the child support, between the two children, one of them who is not going to college?
Okay. So as far as reporting that asset, you're reporting the whole asset, because
for all the kids, even.
But when you're trying to figure out which one provides the most support for that student that's filing the FAFSA, you can separate, you can divide it up, if that makes sense. So if you're trying to figure, well, he or she do provide child support, and we've got 3 kids, and you're trying to figure out which of us provides the most financial support for that student, then divide up, the child support that way. But you still have to disclose what the full amount that you received of child support for that year.
Okay, another question about divorce. This person's ex is retired, living off of a pension. Is the pension included as FAFSA income?
Yes, it's income. Social Security is income. Pension is income. If you're taking distributions from your 401k, it is now income. It's no longer savings.
Okay, here's a good question that kind of like sums up some of the things you just talked about. In terms of divorce, I pay for, this person pays for more, although the ex makes more money and the ex claims the daughter on their taxes. The other parent, the parent who doesn't make, the parent who makes less but pays more has 70% custody. Who, in this case, how would they figure out who fills out the FAFSA?
Again, just use some common sense. The powers that be, they don't care what your divorce decree says. They don't care that you guys, are splitting.
So so just to make it clear, they don't care about custody.
Nope, none of that. So once
again,
they
don't care about who claims the child on the taxes.
So I'm going to give a little bit of a disclaimer there. That
Okay.
is a planning strategy, especially for those of you that maybe have younger children and you're in that, hey, if my ex is close enough to be able to qualify for Pell Grants or institutional aid, but the other ex is declaring that student that you're filing the FAFSA for on their taxes, is it going to make more sense for the other parent to now have that child on their taxes? It's going to be kind of a red flag in a sense to trigger verifications if they see that this one parent is going to, we're going to give a lot of institutional aid, but yet they're not declaring that student on their tax return, because remember, they have your full tax return now. Let's go ahead and ask for more information to verify that this is the parent that should be filing. So kind of common sense, talk to your tax professionals and such to see, are we going to lose more by, making this change in dependence, or is it going to be beneficial for us? I'm not trying to give you tax advice. I'm just giving you strategic planning advice that might make sense.
So there are a lot of questions, Luann, and there is, I think, one topic that we left off the list. It's probably broken out, but maybe you could just talk about assets in general. Which assets get reported?
Okay. Any non-qualified retirement assets, your checking, your savings, CDs, mutual funds, brokerage account, 529 accounts is a parent investment, and it's only for the student that you're filing the FAFSA for. So if you've got 3 children and all 3 of them have 529 accounts this year, starting this year, you only have to provide the balance for the one that you're filing the FAFSA for. So, and for those of you that have, 2 children in college, it's the same. So one student number 1, it's their 529 balance. Student number 2 on their FAFSA form, it's their 529 balance, if that makes sense.
Yes, I'm just looking through because
do not disclose your qualified retirement, like your 401k balances, 403bs, pensions, no equity that you have in your primary residence, no annuities, no that are tax deferred, no cash value of life insurance. And those are pretty much the only kind of.
So there's a question about a
Mhm.
parent being a trustee on an irrevocable
Thank you.
trust.
Trusts are reported. Doesn't matter if it's revocable or irrevocable. The only time that you do not have to report that asset is if it is, and I have my note here so that unless it's been court restricted. So in an example, the student was in a car accident when they were 10, and they know that when they're 18, they're going to have further surgeries and that money is in trust. That does not need to be reported if it's court restricted. Otherwise, other trusts are assessed. And if you have a uniform gift to minors trust or a uniform trust for minors account, that is a student asset. It's not a parent asset.
There's a question here about savings bonds that are a student asset because they are in the student's name, but they're not in the student's social security number. It doesn't make.
So if it's in the parent, savings bonds, you have to report as of whatever the balance is. Just like if you have a prepaid tuition plan, whatever the current balance is and such. But I guess I don't understand. Are they asking, does it get reported as a
As the
student
parent
asset?
or the student, yes.
So if it's in the student's name, it's a savings bond for the student. If it's in the parent's name, it's a parent asset for. Sometimes we think a little bit too much and just, get in the weeds.
Do you want to just repeat this? There's this question about it, about the 529s, but I think it's an important thing for people to hear a few times about how 529s will be treated in the new FAFSA, which is different than in the old FAFSA.
In the old FAFSA, you had to report the balances of all 529 accounts. So if you have 2 or 3 or 5 kids or such, and you have a 529 for each of them, those balances would all accumulate as one balance under the parent's assets. Now, going forward, you only have to disclose the balance of the student that you're filing the FAFSA for.
Which is a change, and which is also a potential planning opportunity.
Yeah. Well, yes and no. So, you got to plan these things out ahead of time.
Yes, yes.
Yeah.
Okay, just looking through if there's any more questions about assets.
I saw somebody ask something about the trust. If the parent is a beneficiary of the trust, it's a parent asset.
So, okay, a question. Can you clarify if a person listed on an elderly parent's bank account, which we get this question a lot because, you're helping out your parents, needs to claim those funds as assets?
So it depends on how you're listed on that bank account. If you're listed as a co-owner, then, half of that is your asset. If you're just listed as a power of attorney to be able to, sign in the event of emergency or such, then you don't have to list it.
Okay. Do you want to go on and talk a little bit about the FSA ID?
Sure. So FSA ID, student needs one. I talked to somebody yesterday. They hadn't, they were trying to log in. The student didn't have an FSA ID account. Your FSA ID is your username and password. You're not going to receive a number from anybody. That is your FSA ID. It's tied to your Social Security number, your date of birth, the name that Social Security has for you in their records. So you go to studentaid.gov, log in, create an account for the student. A parent has to have an FSA ID account as well. It's going to walk you through, 2-step verifications, 4 security questions and answers. Write it all down because you're going to need it at some point. And then once you submit it, it's going to take about 2 to 3 days for it to process. If you don't get an email saying, congratulations, your FSA ID is confirmed, then in 2 or 3 days, just try to log in. Information. I found what's going to happen. The parent or students or parents were not getting the email confirmations. So if you can log in, you're confirmed.
This is a little bit along the topic of FSA ID, but it's really actually just in general using and the FAFSA. Somebody is asking, they submitted the FAFSA, but is there a way to go back and actually check to see what they entered?
No.
Unfortunately.
I don't believe so. No. That's why you need to write it down. You're not going to be able, it's not like an account like where you're going to log in and you're going to see what your security questions and answers were, what your password was and such, because they're trying to keep it secure. If you have to, and you didn't write anything down or your student didn't, and so the best way is you're going to have to go in and click, forgot password, forgot user ID, create, the new, but then you're going to have to wait for all of that to process. So having the security questions and answers, if you've, misplaced the password or such, it keeps it from having to wait to reset everything.
Maybe you could talk a little bit about what the soft launch really means now, and kind of fold into that. Somebody is asking that the college that their student has applied to is claiming that there's a January 15th deadline for FAFSA.
Okay.
And so what's really happening this month of January?
So not a whole lot, except a lot of frustration. The soft launch, they weren't ready, pure and simple. And the soft launch is much worse than any of us had anticipated. First couple of days, it was open for maybe a total of an hour in a 24-hour period. It was ridiculous. So, and the first thing that they, notified, put it out there that we're going to have a soft launch through the month of January. Then they notified the colleges that, oh, by the way, we're not going to be transmitting the FAFSA data to you until the end of January. So the colleges know that, and they're as much frustrated as you are, because they're dealing with a whole new system as well. So please have patience, be kind, considerate, don't blow up when you're trying to speak to the financial aid people at the colleges or the FAFSA hotline. And just be aware, none of them are there to give you financial advice. Just stick to the basic questions. Does my Social Security disability and all these other things, oftentimes they just don't have that training. And a lot of them don't have the training on these new changes. It's just is what it is. So, I would just take your time. The colleges also, many of them have not changed any of their autoresponders. They're still showing, hey, we need your FAFSA by January 5th or such. They know it's not going to happen. So you're not going to get penalized. If you just need to have them, somebody tell you that other than me, and Google it and anybody will tell you this that knows what they're talking about. Contact the college. Be prepared to wait because everybody else is trying to call them. And those of you that are concerned about the state grants. So in the past, there have been, a number of states that will give grant assistance. That is truly the first come, first serve. Get your FAFSA in before money runs out. The federal monies and grants do not run out. The states could, but the states are also aware of what's going on. So if you go to, if any of you are in New York, you go to I think it's the tag, and it states right on there, do not wait for FAFSA. Submit your application to us. So check with your individual states. If you're in that lower income range and you're needing to use that state grant assistance, and find out what is their plan. A number of them have, on their websites, we understand what's going on with FAFSA. And once your FAFSA is submitted, because they're not going to get it until the end of January as well. Same thing as the colleges. So I hope that helps.
Mm-hmm. Can you talk a little bit, because we are still on the topic of FSA ID, if people had IDs from previous years, like who can reuse an ID versus, who needs a new one?
Your FSA ID is tied to your Social Security number. It's going to stay the same for the remainder of your life. The only thing that's going to change is, they have you change your password occasionally. So like last year, you go to log in and it says unauthorized to log in. What they should have just said is, hey, we need you to change your password. So a lot of people got frustrated. What do you mean I'm unauthorized? You just click on forgot password and just upgrade your password or update it, and you're perfectly fine.
So if you have an existing, ID, you're going to use it. If you're applying, submitting FAFSA for a student who is going to college for the first time and they've never filled out FAFSA, they will need a new one, but you can use your existing ID.
Correct. Your FSA ID is yours. Your student's FSA ID is theirs. It's going to be tied to the student loans after they've graduated, making repayments with those federal loans, if they're going to qualify for public service loan forgiveness. So that FSA ID is going to stick with you for the remainder of, your life, in a sense. Years ago, it was a PIN number, and so things have changed. But when people went to log in with their PIN, they were, they had to just then create the FSA ID, username and password. The username and password is your FSA ID.
So, Luann, this is an asset question. I don't think you mentioned you mentioned that the primary home is not considered an asset for FAFSA. What about people who have rental property, secondary homes? And in this case, somebody is saying they just sold their rental property. Is that money going to be considered money they need to report on FAFSA?
Well, starting backwards, if you just sold it and the money is sitting in your account when you go to file your FAFSA, your assets are as of the date that you're filing the FAFSA. So yes, if you have rental property, investment property, and many people, had multiple rental properties and qualified as a small business because with their real estate investing, all of those assets now need to be reported. So if you've got a mortgage, or you subtract all of that. Okay, so you subtract your mortgage from the value of the property to come up with whatever the equity is. And then yes, that's an asset. If it's not your primary residence that you live in, if you have a primary residence, a lot of military people get caught with this. And so they're living in another state, they're renting a house, they have somebody else renting their primary residence. They're going to have to disclose that as an asset, which is unfair. But then you could also click special circumstances and then try to appeal that. It's going to be a case-by-case college scenario.
And so there was a question I actually saw, this kind of relates to what Luann is talking about. They were asking if they have a big bill that they need to pay off, or if they have credit cards that they could pay off, should they do that before filling out FAFSA? And it's the same philosophy that you just mentioned. You want, if you can, pay that off and lower what's in your accounts that you're going to have to report, you should do that ahead of time.
To a degree. So you, again, use common sense. If you're going to need that cash reserve to help you pay for college rather than taking on high interest loans, be strategic about it. Your income is the major driver of what your SAI number is going to come out to. So if you're, above, say, 150,000 to 250,000 adjusted gross income, and you're concerned, oh, I've got an extra $10,000 sitting in my my savings account, should I spend it? If that's the only emergency fund asset that you have, don't spend it because you're concerned about what it's going to do to your financial aid. So you have to be, look at the broader picture.
Okay, one last asset question, and then we should move on to multiple kids in college at the same time. A person is asking, they have an estate, it sounds like they're the executor, and they have an estate account for their late mother. That doesn't, how does that factor in or not?
If the estate is still in like probate or it hasn't been dispersed yet, then no, that's not considered an asset.
Okay, do you want to give the summary about what is happening with multiple students in college at the same time, what it used to be and what is happening now, and how you believe colleges may or may not factor that into their decisions?
Sure. So in the past, if you had more than one student in college at the same time, and that your student that is a senior in high school right now that is going to be attending college in the fall, they are considered on the FAFSA a student in college. So let's say you've got a high school senior and a college sophomore. So that would have been considered two in college in the old days. And so your EFC number, let's just say it came up for one student, the calculation, income, assets, and all of that. We're not going to get into it. And let's just say it was 30,000 for one student, but you have two. And it's not always exact, but for example, now your EFC was 15 and 15 for each student, which meant that depending on the colleges that they were applying to, sometimes they would get institutional aid because of that, because you take the cost of attendance minus the EFC equals the gap or the need. How much need does this family qualify for? The secret sauce, of course, is then how does the college, how do they assess how much they're going to give? Is it going to be 100% grants and scholarships, or is there going to be a percentage of grants and the rest is in loans, or is it only 50% that they're going to meet? So it just, again, your college list is very important. Now, with the SAI, Student Aid Index, although just, the FAFSA does still ask how many students will you have in college. So you'll report that. But now, if your SAI was 30,000 for one student, it's going to be 30,000, give or take a little bit, depending on what each student's income and assets are. So it's going to be for each student. So there's, we've been very concerned that for students that are in college already, that were given grants because of this, multiple student discount, are they going to lose that? So what I had been working with my clients last year as they were going to accept and they were getting awards based on two in college, ask. You have to ask. You can't hide your head in the sand and ask, how are you going to, assess next year with the new FAFSA regulations? And the school is going to tell you where things are going to stay as they always have been, or we don't know. We're waiting to hear from FAFSA. That's kind of a red flag that what if they decide, they don't have the funds to be able to still continue to give those grants? You have to make a decision. Are we going to be able to have our student attend that school? So now, for those of you that didn't have that pre-planning warning, it would be really wise to contact your school's financial aid departments where your children are already in college, if you've got multiples, or now you're going to have a multiple, and ask them, how are you going to, manage this change? What is it going to mean for us? So that you're not finding out really, bad information in April or May. You just need to know ahead of time so that you can make appropriate choices. many of the schools, they don't want a mass exodus of students. So if they've got it in their budgets, in their endowments and such, they want you to stay. They want you to choose them too. So, that's why you need to ask and find out. And so a lot of them are not going to follow this new lack of multiple students to the letter with FAFSA. So it's hopefully more often than not, but only time will tell. This year is definitely a big testing ground.
Can you talk about situations for families and parents where their income fluctuates a lot? So they might be a freelancer, or they just have had changes for better or for worse, their income changing, and what income changes are going to matter. So like, a lot of people say my income is going to be less this year, in 2023 than it was last year. So maybe touch on what tax year is actually used, and if your income changes from year to year, what you can do.
Okay. So you have to use the 2022 tax return. There's no way.
Period. Yeah.
But if you're, we finished 23, for sure your 23 income had dropped due to job loss or, whatever the case is. And, there's a question on the FAFSA this year, which is really new. Do you have special circumstances such as a job loss or medical issues or such, which I was shocked to see. You can check that. You're not going to be able to explain it on the FAFSA. You're still going to input 2022 in now your current assets, but you will then follow up with the financial aid departments at the individual colleges to find out what is their process for special circumstances forms, for professional judgment, for documentation, and that sort of thing.
And talk about professional or appeals and how it's going to be slightly different this year than last year in terms of what the colleges, will be doing.
They all have to consider your appeals. So in the past, certain colleges, which will remain nameless because I don't want to get myself in trouble. I have my favorites and my non-favorites, but they all have to at least look at it and consider it. They can't just a blanket statement. We don't do appeals. It is what it is. So that really means, again, the financial aid offices at the colleges are, those poor people are going to be pulling their hair out just the same as you are right now trying to file the FAFSA, probably worse. They're understaffed and working within new guidelines and new systems, and they're going to be way behind because of the FAFSA delays that have nothing to do with them. So just, give them some grace.
Okay, how about you explain again a change that is happening for small businesses, and how there's a question here about somebody asking how they should value their small business, especially it's a business that can't necessarily be sold.
Okay. So in the past, if you had a small business, family-owned business that was less than 100 employees, you did not have to disclose the assets. If your family business was a family farm, you did not have to disclose the assets. That is gone. One of the bigger tragedies, I believe, of this new change. So now you have to disclose your business and your family farm assets. It's going to really hurt those out in the Midwest with some of these large farms that might have $1 million worth of machinery and such, but they only pay themselves, $40,000 a year. My suggestion to you is make sure that you don't overvalue your inventory and make sure that if you have loans out, you deduct those. If you are waiting for people to pay you, You don't include those accounts receivable in your ultimate net worth. And then appeal, because, again, it's going to be individual circumstances at the colleges, whether they're going to take that into consideration.
Talk about the income protection allowance, what it is, and what's happened this year with that as well.
Okay, so back in, earlier in the year, we had the income protection allowance, which was going to be increased to try to help offset some of these other changes with, multiple students and such, inflation, which we've all been hit by. And so that was great. And so all these SAI calculators that are out there, my college money report calculator, they've all been programmed with those new income protection allowances. Well, a month ago, we were notified, hey, we didn't get the calculation finished for 24-25. So it's not going to be implemented until 25-26. So if you're going by, those other SAI calculations, just be aware there may be a big change, anywhere from $4,000 to $8,000. So, it's unfortunate, but we can only deal with what they're presenting to us.
Okay, just looking through some questions.
Well, while you're looking, so one of the biggest positives is grandparent assistance, other family financial assistance, financial gifts that a student has received and such. 5 to 9 disbursements coming from grandparents or whoever. None of that is now going to be assessed as income to the student like it used to be on the old FAFSA EFC. So going forward, if you have a grandparent that wants to gift your student, the maximum, I think last year was like $17,000. It's probably going to change this year. But it would always add to income to the student, and a student's income was assessed at 50 cents on the dollar above their income protection allowance, which was never very fair. So that's no longer going to be a case. So again, it's a great time for some strategic estate planning for grandparents and how it's going forward. And I know somebody's going to say, well, then should I transfer my 529 account that I have for my student into my my parent or the grandparent's name? You can do that. Is that going to be wise? You have to look at things more than just that face value. Because once it's out of your name and it's in the control of someone else, if something happens to them, they pass away or such, now it's tied to an estate and you may not have access to it when you need it the most.
Do you want to talk about a few situations where maybe parents refuse to fill out FAFSA or, independent versus dependent situations?
Okay. So this year, a lot of students are in situations that many of us that are on this call would, never put our kids through. But, they're living on somebody else's couch because their parents kicked them out, or, all kinds of things that many of us are so naive to that these kids are going through. If their parent absolutely refuses to help them with filing the FAFSA, there will be a way. There's document, and there is a question on the FAFSA form for the student to answer. And so the bottom line is that if it does qualify, if it's not just, well, geez, if we don't have to, if we say that we're not going to help them, they're going to get all this aid. It doesn't work like that. All they'll be able to receive is the unsubsidized loan. So as a freshman, their whole loan value would be $5,500 in unsubsidized, rather than a possible subsidized and unsubsidized. But it's a way for those students that are having these, these challenges to still possibly be able to go to community college or such. I think there was a part 2 to that. I don't remember what you said, Debbie.
Oh, sorry. I don't remember either. I've been answering questions as you've been answering questions. Okay. How about talking a little bit about 401ks and assets that, how some of those assets used to be treated and now how they're going to be treated this year, and Flash, there might be an opportunity here for some people.
Oh, absolutely. So, in the past, they would take your line 11 adjusted gross income, and then the questions would be, well, what were your contributions to your qualified plans off of your W-2? What about HSA and FSA? All your deferred contributions would get added back to that adjusted gross income, which again, puts your income, almost completely at, what it was, the base salary. Now, because they're only taking the information off of the 1040, you do not have to input anything about your earnings from your W-2, your contributions or such. So none of that is getting added back if you're in a employer-sponsored plan. That's the caveat. For those of us that are self-employed and have our own SEPs and simples, because we don't have, a big employer that's managing that, that does show up on your 1040 and it will be assessed. So again, there's an appeal opportunity there for the schools that your student is applying to, but also for those of you with younger students, it's a way to maybe max out your retirement contributions, your HSAs, FSAs. Those of us that are self-employed, talk to your financial advisors and your CPAs. Maybe I can, instead of having a SEP or simple, start my own 401k or such. So there's a lot of opportunities there that need, forward planning. And by forward planning, you have to put these things and implement them before the end of your student's sophomore year in high school, because January 1st of their sophomore year, that's prior tax return. So whatever's on if the IRS doesn't, if they tax it, it's going to show up. If they don't, it doesn't. There was a catchy little phrase that I was using. I can't think of it right now.
There's a good question about if you have any recommendations of the order in which to fill things out. So for example, can a parent start the FAFSA without really being invited from the student? Can they start it and do their portion of it? Is there kind of a best practice, you think, about how families should go about who should start first and invite the other contributors?
So the best practice is supposed to be the student sits down and inputs their information and invites the parent. The parent receives an invitation in an email, and then they log in with their FSA ID and they, do their portion. With all the problems that have been happening, I would dare say that's how I am going to work with my clients, and that's how we're going to do it. So our parents logging in, I spoke to someone yesterday who logged in without it being invited, and she was having a lot of issues with, information disappearing and such. So is that got to do with just the glitchiness? Does it have to do with because she wasn't invited yet? Why wasn't she invited yet? Because the student doesn't have their FSA ID yet. So, follow, I'm a rule follower, so follow the rules. And I think that's going to be your best recourse. And again, I'm not touching this for my clients unless there's a real need to for at least another week. Now, I have somebody, just like the person that said, I just sold my property. I have somebody that kind of a similar situation in a sense, but the money is sitting in escrow. We need to do this before that is dispersed. And it's going to be dispersed sometime next week. So we're going to sit through maybe hours, who knows, to get that done so that they don't have to disclose that money, because it's going to make a $20,000 difference in their SAI number, and they will qualify for Pell Grants without that additional asset.
Well, a quick question about assets where parent and student are on it together as a joint account. How should they be reported?
Parent and the student that they're filing for?
Yes.
Okay, it's a student asset.
But even though the parent is on, no, the parent and the student are joint owners.
But it's the student's account. The parent is on there probably because they opened up the account when they were younger or such. Students, if that account belongs to the student, then it's the student asset.
Okay. What, I mean, there's so many questions here, and I apologize, we only have an hour. And what else, Luann, do you think that's big that we missed?
If you're logging in and you keep getting the same error messages, clear your cache, your cookies on your computer, and see if you might be able to log in without that, without getting, those same errors. Include your retirement balances, home equity, annuities, and cash value, life insurance. Those, are not counted as assets. I don't know.
How about one more thing I'm seeing a lot of slight confusion about? We talked about 401ks and IRAs, but there's a confusion about how the retirement money is treated for the adjusting income versus how it's treated for reporting assets.
So I think I understand that as, again, starting this year, when you log in, you're going to say, yes, I authorize the transfer of my tax return to FAFSA. On your tax return, it doesn't disclose what you have contributed to your tax deferred retirement accounts. So whatever your contributions were are no longer going to be added to your adjusted gross income. You are not going to have questions that are asking, on what is in your, box 12D, because they're looking to see what was your deferred contributions, because you didn't pay tax on it now, you're paying tax on it later. The FAFSA always wanted to know what's your full income. So I think that might answer that. You do not disclose any of your qualified retirement accounts as assets on the FAFSA. When it comes to the CSS profile, they're going to ask all of that information, but it's not on the FAFSA. So I hope that helps.
One other change, which we didn't talk about, this is positive, not earth shattering, is that you can now list up to 20 colleges to send the students FAFSA to, but there still was a question of somebody who said, what if my student has more than 20?
Yep.
When can I remove some of the colleges so I can add new ones?
Okay, good question. And so because of everything that's going on, make sure that you're listing your top 20 colleges, and which reminds me too, if your state offers grant assistance, always list your state schools first on the FAFSA. I don't know how they end up knowing anymore, because no longer do schools get to see all the schools that are on your FAFSA, but do that for state grant assistance. But if you have more than 20 schools, most of your musical theater kids and such are going to do that, then what you have to do is make sure that once your data has been submitted to the schools, and remember, it's not going to be until the end of January, and your student isn't going to receive their new FAFSA summary until that has been submitted. Once they receive that, then you are supposed to know that, okay, the information has been received by the schools. I can go in, and you can do a couple of different things. You can contact the FAFSA hotline, and at the very top right-hand corner of when you've submitted on the student summary is the DNR number. And you can give them that number, and they'll look up your account and they'll add those other schools. Or you can go in and delete the schools that are on your current FAFSA. You just have to make sure that they have been submitted to those other schools. Or you can call the school that you're going to be adding it to, give them your DNR number, and DRN, sorry, and give them that number, and they will look it up and add they will add themselves. But remember, it's going to delete. As you start to add, you have to delete some of those initial 20.
And the last topic, maybe just, I don't know how many parents that are on this call this relates to. How about mentioning for foreign students? Or I've seen a few questions where the student is a US citizen, but the parents are not.
So the student can submit a FAFSA and still qualify for federal student aid if they're a citizen, and the parents' information will still be included.
Okay, well, there are a ton of questions here. What I'm going to do is print these out. We're going to try and group them together to see if we can, answer them a little bit more concisely. And honestly, probably send out either. Yeah, go ahead.
I just saw, free lunch. So, gosh, my mind just went blank. But, there's federal means tested for those. It used to be the, oh gosh, you were automatically deferred from having to disclose your assets if you were under a certain EFC number. So now it's going to depend on if your income is below 60,000 and certain things. But if you had federal means tested benefits like WIC or SNAP or Medicaid or such, but they have removed the free lunch from that federal means tested, because there's a lot of schools that are still giving free lunch from COVID to, so people that would never qualify for federal means testing for free lunch, they can't get a Pell Grant just because their school district is still giving free lunches. So that one does not count.
Okay, so
Sorry, I saw it and I just,
nope, that's okay. What I'm just gonna finish what I was gonna say. We will download a lot of your questions. We will probably summarize them into categories and put out a post, that try and answers as many of these questions. I'm not sure if I even talked to Luann about this, but I think so. We were going to try and do another one of these in a few more weeks. We want to kind of give people the chance to, submit. Hopefully glitches will calm down in the system. And we thought we'd come back before the end of the month and do another session. There was a comment, and I completely agree about maybe doing a completely separate session on divorced parents. And I think you're right. There are just so many questions, justifiably so. So we probably will maybe separate that out. So we'll do a separate one for divorced parents, and then come back and do another one of these sessions in a few more weeks. And hopefully we'll have answered more of your questions. The system will have calmed down, and we can spend our time doing something else as soon as we can get through a lot of these hiccups.
Becca put it on the calendar for January 30th.
Okay.
And it's going to be at, what I think 8.
Oh, we were going to do a nighttime one. Exactly.
Yes.
The third.
And
So
for all of you that live in California, I'm on the East Coast. I'm old. I get up at 4 o'clock in the morning. Those late night calls, and we never finish in 2 hours. So I hope you appreciate it.
So sorry we can't spend more time today. This is in the middle of the day, but I think hopefully we touched on some important topics, answered as many questions as we could, and we will keep coming to the Facebook group, Paying for College 101. Ask your questions there. Not everybody who answers is a professional, but a lot of people have good information. So at least it's a start. And a lot of people actually wrote here, go to the government website. I mean, they've been doing a better job of trying to answer it. And also we will send in our follow-up email. We have some posts that also detail out, answers to a lot of your questions on our website, which is at road2college.com. So thank you, everyone. And thank you so much, Luann. And we will see you soon.
All right. Good luck, everybody. Happy New Year. And just be patient.
Yes, yes.